Good morning, folks. Frank Zorrilla here. Friday, the 11th, 8 o'clock in the morning, doing a quick video here for the room. Let's talk about the market right off the bat. Here we have the SPY. I'm not crazy about talking about the market every single day or dissecting every single bar. I believe it's a waste of time. I only like to talk about the market where we're pretty much at an inflection point or maybe a turning point or a critical level. But besides that, I'm not crazy about dissecting every single daily bar or every weekly bar in the market at all. But either way, what's going on right now is very simply, the market had a tremendous move. We went from oversold to overbought in a matter of inside of 25 days, whatever the case may be. We were down here 8 days in a row, down 15% for the month. People were saying we were going to crash. We're going lower, recession. The market is a discounted mechanism, and everything. They threw everything across the board to scare tactics. Now the market had a tremendous rebound. For whatever reason, you can say the Powell, the Fed put, whatever. Either way, right now the market is up. The S&P is up to what could be resistance. That's a big possibility. It's potentially resistance here, this level 260. Everyone's looking at it. Everyone knows it. We might go through it. We might not. No one really knows. But the point is that over the last couple of days, this week, I've just been a little cautious with new ideas, with new long swing trades, because I still believe that the market right here is the correlation with the actual market and individual common stocks is still extremely high. So if we get a shakeout, chances are that every single stock is going to go down along with the market more than likely. So I've been a little cautious here with new ideas. Here's the McClellan oscillator, overbought, oversold indicator. We went from being extremely oversold, negative 246 right over here on this day, December 24th, to 250 yesterday, 250 the day before yesterday, 227 yesterday. We went from oversold to overbought. The thing is that oversold and overbought indicators work slightly different. Oversold, you can time it a little bit better. They're more timely, they're more reliable, and they're more actionable as far as if you wanted to fade the oversold levels. Overbought levels work a little different. They're not as timely. They're not as reliable, and they're not easy to fade like the oversold levels. So you have to keep that in mind. And another important thing is when you're looking at an index that's overbought, it doesn't have to go down. We can go sideways. Like for example, the IWM is up huge, 125 to 144. That's a tremendous amount. We're talking about roughly 14-15% in a matter of a few days. This is a yearly move that happened in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. That's a year worth of move that happened in a matter of 11 days. So we can easily just go sideways. And if we go sideways and digest this move and compress some engine and move higher after that, it would be more favorable for the bulls. We can go sideways here for 5 days and the price will stay here at 143.64. And to me, in my eyes, it would be a much better risk reward trade to the upside than it is right now, even though it's going to be at the same price. So we need to digest this move. It doesn't have to happen, but it's more than likely going to happen. And I believe that what's going to happen here is something similar to what happened at the beginning of 2018 and 2016 and 2011, where the market went down big, retraced a bulk of the down move, and then had a sharp pullback, and then it went back up, and then it retested the original low like a month later. Let me show you exactly what I mean. This here is at the beginning of 2018. As you can see, we were here at 285. We fell 20 straight points in a matter of a few days, roughly about 7%. And then we got oversold. We fell a little bit more. We fell down to 260 after that. So we were down 8%, 8.7% in a matter of a few days. And then what happened after that was that we went down a little bit further. We had a very nice rally here from 255 to 275, which is roughly 7.8%. And here's what I'm talking about. From here to here, this is about 9%. And this is the shakeout that I'm talking about, this quick shakeout that I think can easily happen now. And then we went back. We went a little bit higher. And then we had a quick retest. I think we're somewhere over here. Okay? And this can easily happen. This is a big move. It's still a very volatile market. This is a big move. If you go back to 2016, I think we had a similar situation in 2016 where we had this down move right over here. We had this quick bounce, and then we came back down to retest. I don't know if we're going to retest, but I think that you get these type of, big moves to the downside. You get a sharp retracement, and then it gets a little bit more dicey. If you go back to 2011, similar situation. Straight down, this is a big rally from here. 112 to roughly, 122. That's about 8.9%. And then we had a nice retracement in a matter of 4 days. Then we went back up, and then we went back down. So I don't think we're out of the woods yet, and this is a possibility. This is the reason why I'm being careful with new swing trades here. Okay, I'm either not taking them, or I'm taking them for the most part, but I'm reducing size. Okay, because I don't want to get caught in this level here. And the reason why, if it continues to go higher, I'm under no pressure at all to try to squeak out some gains here in the short term, because I already own the indices. This is the reason why I believe it's important to own a piece of the indices, because you have them as core holdings, and you're going to participate no matter what. So you can be wrong. I could be wrong in my thinking. We can continue to move higher in a straight line, which is it's a possibility. It probably won't happen, but it's a possibility. But it doesn't matter. Because I own the indices, so I'm going to participate at some level. My job, very simply, is that when the market is favoring my setup, my go-to setups, within that little window, that little time frame, my job is just to knock it out of the park as much as possible, and then allow the market to do whatever it is going to do for the rest of the year. But so I'm looking for that little small window where I want to create alpha, and the market is just favoring what I do, and that's when I want to go out there and have some big months. But since I own the indices, when the market is moving up and I'm not finding things that really fall under my criteria, it's not a big deal. I own a piece of it, I'm involved, and I'm happy. And talking about 2011, someone put this on Twitter this morning. This is the S&P today versus the 2011. It's a very similar situation here, okay, where big down move, big rally, and we're probably gonna get a shakeout, a real quick shakeout, which is a real big possibility, and I don't think it's gonna be small. So this is interesting. Correlation here equals 81%. Again, these are just possible outcomes. Whether they happen or not, no one really knows, but you need to have an open mind that we can have a quick shakeout here. Now let's talk about the daily watch list. Again, look, the focus of the room is the weekly setups, okay? And the reason why the weekly setups are much easier to follow. They're just a lot easier to follow, less noise, less transactions, which is better for us. The daily setups are just something that, these are the stocks that I'm looking to swing trade, okay? When I'm looking to swing trade something, I'm looking to swing trade them for the next 3 to 10 days. And I'm looking to buy stocks that are not overextended in the short term. They're not up multiple days in a row. I'm looking for stocks that are going sideways, that have the pattern of stocks, that have previously moved higher. So in the short term, stocks move in momentum bursts that might last anywhere to 3 to 10 days. So we want to make sure that, number one, we're not buying something that's already up 3 days in a row or more, and we want to buy something that's just getting started. Okay, so with this watch list, you have to make these things your own. Okay, as of right now, most of you know me. Maybe some of you don't know me. So my setup criteria and the way I look at charts might be slightly different, and it is for most people, because most people, they tell you these things that you have to buy stocks near highs and it's got to be up here, and it's got to, all these crazy things. But the point is that if your time frame is anywhere between 1 to 20 days, your average holding period for your swings, what you need to do is just take a look at the best performing stocks within that time frame, so that way you're able to see what works and what doesn't work and what's true and what's not true. Okay, and that'll be an eye opener. Okay, because stocks in the short term, they move from the bottom, they move from the middle, they move from the top, and depending on the market phase, certain setups work better in different market phases. We just came out of we're in the phase right now that over the last week or so, what's been working best are the stocks that have been, beaten up the most. The ones that are trading near 52-week lows. Those have been the best performing stocks so far. All right. Once the rally matures, if it does mature, okay, and we continue to move higher, then the stocks that held up best will more than likely be the best winners when that happens. Okay, we're not there yet. So what you want to do is you want to make these individual stocks your own. Okay, you want to make these setups your own. Like, for example, here's my list. I already know, like Zuo, I already know that my alert here on the screen is going to be 2011, which is yesterday's highs. My buy stop will be 2021. My stop loss is going to be right over here, 1890, 1880. I already know how many shares I want to buy, how much I want to risk. UMR, same exact thing. And just to let you know, we went from a market that we didn't have any setups, and what we were looking at were just the individual ETFs. Now, 2 weeks later, we're finding some setups. Okay, we're finding some setups, which is a positive. Here's UMRX, fairly new company, IPO back in April. Sellers have been in control. Here's the white line, which is a 10-day moving average. Yellow is a 20-day moving average. The sellers have been selling the stock every time it gets to those averages. They're completely in control. We had a big update here on decent volume, relative speaking, to this stock. And then the stock has been trading sideways. I like the stock going through here, 453. So my alert will be at 453. Buy stop at 460. Stop loss at 430. Okay. WB. I'm not crazy about this stock, okay? It's almost on my do not trade list, but either way, Chinese names have been doing well lately. This one has been in the downtrend for a while. As you can see, the 10, 20-day, 50-day, and the 63-day moving average, which is a quarterly average, they all been acting as resistance. Now they're all together here. This is very simply what's going on here is that the sellers have been in control. The stock is now at a level where the sellers and the buyers have found some type of equilibrium, okay? They're matching orders. Either that or the sellers are running out of supply, and the demand for the stock by the buyers is a little bit more. That's all this is. That's all this box is. These guys are now going back and forth, back and forth, back and forth, back and forth, and the buyers have an interest here. This is an interest for the buyers. That's the reason why the stock stopped going down the way it's been going, the way it was going down. So now, I like the stock going through 60.14 with a stop here at $58 a share. Okay. As far as a move higher, my target is always up. I'm looking to sell some on the way up and then raise my stop as soon as possible. VKTX, biotech name, same exact thing. 10, 20-day moving averages have been acting as resistance. The stock finally broke that little pattern. Now it's trading above. Stock is down 3 days in a row. I like the stock going through $8.37 with a stop here at $8.790. Aqua, which we had in the list yesterday, printed an inside day. Looks good to me. The alert $10, buy stop 10.10, stop loss right over here, call it 950. MRIN, this is a day trading stock, okay? It's a stock where there's no follow through whatsoever, but intraday it gives you enough to take a nice chunk and make enough money. Like, for example, here I bought the stock at 564, the stock hit a high of 667. That's a big move. We had this on the list right over here going through this high, 560, and then went to 685. That's a big move. So right over here, I like the stock going through 592, buy stop at $6, stop here at 540. UBX was on the list yesterday. I like to start going through 1635, buy stop 1645, stop loss 1590, 1580, EIDX. I like to start going through 1450, buy stop 1460, stop loss. You can play a little bit tighter, perhaps 1380. Noah, Chinese name. Yeah, looks okay. Chinese stocks are doing well, so you got to make sure that when there's a sector or some type of theme playing now in the market, that you take advantage of that. So Noah printed an inside day. I like to start going through 45.05, buy stop 45.15, stop loss, $44 a share. Lilly, I like Lilly. I like Lilly as a weekly setup. But they report on the 30th. So I'm just going to watch Lilly. ATTU, software name down 3 days in a row. It's a little sloppy, okay? But you can see here the moving averages are all crunched up together. I like to start going through 2060 with a stop at 1960. So those are the ideas, okay? You have to make these individual names your own. I'm completely in control of the weekly setups. The individual names, there's certain nuances that go on that it's just too hard for me to go over each individual trade. And not only that, it's just extremely hard to follow. What you want to do is you want to make this on your own, and you want to create your own list. You want to see what it is that I'm doing, and what's working and what's not working, and you start creating your own list. So that way you can learn how to fish for yourself, which I think is important. So trade them well and be well.